income and other sources of income like online businesses. You have cashback apps or things what we can do today and investing, things we do today to create another stream of passive income. So, what are the risks depending on the stock market as a source of income? Now, I've been watching a lot of videos on YouTube how a lot of people want to live off of dividends, and there's people. I see a couple of videos recently that living off dividends is not great because they can get the dividend cut, and dividends is made for reinvesting. Is that made for living off of? You need a lot of money to live off of, which is true. So what's the really risk of living off of dividend? Depending on the source of income. See, yes, you can live off dividends. You could, but you could get a lot of money. First, let's talk about the pros, the pro side. You get a lot of money to live off dividends. To make $3,000 a month in dividends, it's a lot of money invested. That's years or years of reinvesting and buying stocks every week. You can't buy stocks every 2 weeks, every month. You gotta buy stocks every week. Now, I'm not giving financial advice either. So, for me, I do. Who don't want to live off dividends? Who want to live off stuff they invested in for years and live off those dividends? But let's face it, you will need at least $3,000 to $4,000 to live off of. You have light, water, you have a cell phone bill, you have car insurance, maybe a credit card, and those are the household internet. Those are the TV. Those are the household bills. You have groceries. You gotta buy clothes. You gotta put gas in the car. Gas is high. You gotta buy gas in the car. You gotta get the oil changed. You have to buy new tires every once in a while. You have to get house repairs. You have to, or you have a house. You have house repairs. In an apartment, you have rent increases. Stuff comes up. You want to take a vacation. You want to go spend some money. So living on dividends, it's very hard to live off dividends. It's possible. I'm not saying but it's very hard to live off dividends. So the risk of the stock market, depending on the income source, is that yes, dividends are not guaranteed. Dividends can be cut. They can be cut in half. They can be suspended or stopped paying. So there are risks of living off dividends. And it takes a long time to get there. And I'm not saying don't invest. What I'm saying is we should be having dividends to pay our monthly expenses. It could be very hard unless you're making like $8,000-9,000 in dividends. That's different. If your monthly bills is $4,000 a month and you're making $8,000, you're good to go. But remember, if you're making $8,000 a month in dividends or whatever, something like that, and your all your monthly expenses, including food and travel, is like $40,000, you have $4,000 left. That's great. But remember, if some stocks cut their dividend, even to like, I had a stock called Earn or ticker symbol Earn, and it was paying 10 cents a month. Then it cut to 8 cents a month. And that's a big cut. But if a few or 3 or 4 of my stocks cut their dividend to 2 cents or a cent, my income comes down a little bit. So it's like that. So you could do it, but there are risks. So anything you do in life, there's risk. There's no risk, no reward. The stock market has risk. Investing in real estate is risk. Having a job is risk. What I like to do is tell people, look, I would like to pay my monthly bills. And people are more in line with that. Because I make $1,000 a month, and my monthly bills come with light, water, internet, my cell phone, credit card, and my monthly bills is $800, not including my rent and mortgage, and I make $1,000 a month in dividends. I got a little cushion. I'll have to come up with the money with the mortgage and rent, but I'm not paying these bills. So there's risk of having the stock market as an income source, but there's also a risk of owning a rental property because if the tenant don't pay the rent, and if they lose their job and can't pay the rent, you're not getting rent money. And like when COVID happened, the government came in and said, "Hey, you can't throw nobody out, not paying the rent." So that stuff happened. Some people stopped paying the rent. Some people still pay the rent. So there's risk in everything. So my advice to everybody is never have the stock market as a part of your portfolio. I have Fundrise for real estate. I have Concrete. It's another real estate app that pays you weekly. I have dividend paying stocks. I have dividend paying ETFs monthly and quarterly. You want to diversify as much as you can income sources, because if one takes a hit, if one slows down a little bit, you have other ones to back you up. As far as Concrete pays weekly dividends, Fundrise pay quarterly dividends. As a real estate, not a stock market. So I make sure that you diversify as much as you can, because stocks can cut their dividends. You just want to look purely on dividends, because if 3-4 companies cut their dividends in half, because if a stock paying you, say $100, let's say a stock, I have Armor. I'm gonna show my dividends here, and you see if Armor Realty right here, they're paying 10 cents a share. If they cut it in half, that's cut half of a lot of my income. So it goes to $100 to $50. And if they cut the dividend, it could happen. So, like Orchard Lake Capital, if they cut the dividend from 4.5 cents to 2.5 cents, I probably make it $12. So this stuff can really happen. It can happen. So my advice to everybody is to diversify as much as you can. If you want to get into real estate, there's Fundrise. If you just Concrete pays you weekly dividends. Fundrise pays you quarterly dividends. We should invest in real estate through apps. Get your own rental properties. Have an online business. I have a course down below to teach you how to do an online business, so you can start that. So you can have income coming from Concrete and Fundrise. You have dividend income. You have an online business, maybe another side hustle. You have other income streams coming in. So if dividends do take a hit, or if Fundrise or Concrete take a hit, if your online business take a hit, you have other streams of income that's going strong. So I'm not a big component of living purely on dividends. You can do it, and it's possible, but if companies do cut their dividend, like Armor Realty, the price has been going down for a couple years now, and if they say, look, we'll do 6 cents a share, it goes from almost $100 to $60. That's a $30 drop in my income. The $30 is not a lot of money, but still, that's a little chunk of change. So diversify. I have a link below for the 15-day Builder Challenge. You can start learning online business. I have a link to Concrete, which you can invest in real estate for $1 and get paid weekly dividends. I have a link to Fundrise. You can start building a real estate portfolio with $10. I'm not getting any financial advice, but think about long term. Think about these things, because they can go really fast. Okay, so thanks for watching my YouTube video, and I'll see you next time.